Good morning, everyone. How are you, Gustavo?
Good morning, Jaime. Pleasure to be here again. Thank you.
Back to back. I mean, the audience doesn't know this, but we recorded yesterday and we're recording again today.
We're becoming podcasters, content providers.
If we don't succeed as VCs, we have another career.
Exactly.
We should start a band with our guest today.
Exactly. And funny thing is that we recorded a podcast yesterday with CK of Qualcomm Ventures, and we usually ask our guests to recommend someone to invite to the podcast that hasn't been on before, and he actually recommended our guest today. So who's our guest today, Gustavo?
Real story, real story. So our guest today is Edson Rigonatti from Astella. Edson is the founder and managing director of Astella, which is one of Brazil's most premier venture capital firms, and was recently awarded by the largest fund of funds for venture capital as one of the top three most recommended VC firms by the founders. Edson is not only a friend but also a musician. We found out in doing the research, and we want to go deeper into that. So Edson, the floor is yours. Thank you for coming.
Thank you so much, guys, for having me. It's a honor, a pleasure, and I would love to take this conversation forward.
Awesome. Let's see where it takes us. So, Edson, we like to start with the personal, more from the personal side of our guests. So, why don't you tell us a bit about your background? Where did you grow up? What did you do in school? I think you actually did some interesting things in high school, like learning to code and playing music. And then, what did you study, and how did that end up in the more professional career?
Sure. Well, I grew up in São Paulo as part of a large Italian family, very entrepreneurial, a family that I came from the countryside, moved into the city in the late 30s, 40s, last century. A
What did they
family.
do from an
Uh,
entrepreneurial point of view? The family.
I mean, they all came into São Paulo to make a living. They used to live in farms in the countryside. So my grandparents they came into town to try a better living. So they start doing different stuff, construction work, transportation, all sorts of possibilities that were rising in Brazil in the 50s. Um, my parents they were the first generation that actually went to school from their families, and my father decided to launch a business in the early 70s. So I grew up as part of a entrepreneurial retail family that came out of nowhere, trying to get out of the slums into a decent living. The business grew up a lot, and the our lifestyle improved. We became middle class, high class, and that was when I decided to become a musician. Um, I did that for about 5 years. I used to play chords, guitar, violin, everything that had chords in it. And I actually became part of a thrash metal band, which was a pretty pretty popular in Brazil in the late 80s, early 90s. We were kind of like a big thing here in São Paulo. Um,
What was the name?
the name of the band was Sacred Curse.
Secret Curse.
And I think that our peak point was when we launched our record with Nirvana in São Paulo.
What?
Yeah.
What do you mean
What?
launch it with Nirvana?
Well, I mean, they came into town to launch their record in 1991, and our label was the same label that was launching Nirvana in Brazil. So they actually took us alongside Nirvana for the weekend to launch. It was really fun.
Nice.
What? Amazing. And how was that? How was that? How was Kurt Cobain?
Crazy guys.
That I can imagine.
I can imagine.
I can
it,
imagine.
it was one of the best weekends of my life. And when he came back to the US, when he went back to the US, he was cover for Rolling Stone. And the reporter asked him what was the best band he had heard in Brazil. And the only band he heard of was us. So he actually mentioned us. We became like this big thing because Kurt Cobain was talking about us. We were invited for a tour in Europe, and then the band broke up.
Fast. That was fast.
We
Your
never,
band broke up.
Yeah,
Okay.
yeah,
yeah,
fast.
yeah, our band broke up. We never
Well,
made it
well,
to
it,
Europe, and that was the end of the dream.
well, it is indeed a very good experience for founders, right? For recruiting founders and seeing how founders teams will work in the future.
Absolutely. I think that a putting together a band is the same thing as putting together a startup. You go through the same co-founding dynamics, building a team and putting together a product, which is actually the music, and then go to market, the same thing. So it was a pretty interesting experience that actually resonates every day with what I do, which is really awesome.
So, just one last question: do you still play? Do you have a band so far or not?
I do not, man. I
Dropped
actually,
it out.
yeah. I can't explain why, but kind of the whole thing was left behind. I love music. I live on it, and I actually like to study musicians. I like virtuosos, which is actually part of my investment style. I usually like to say that we love investing in bands like the Police, but I will never invest in bands like Ramones.
What do you mean by that?
Well, I mean, I like to go after virtuosos founders, people that actually like to study and play well. uh, I don't like founders that just do music without studying. So that's very kind of a value approach to VC, which resonates to the whole Cobra Kai Mr. Miyagi dynamics, if you will.
Mm-hmm. Mm-hmm.
So it was indeed one night only. Every time in every European city, it was indeed one night only.
Absolutely.
Great experience. And from that, you went to work at Lojas Vepper, your family business.
That's right. I joined my dad. I actually got into school again because I did music for 2 years, full time. And then in college, I decided to do business administration and start working with my dad. I did that for about 6 years. The business was growing fast, but I was not getting along too well with my dad. So I actually decided to leave the family business and go to the US to get an MBA. Went to Columbia, and from there, fell in love with technology. That was in 1905. Uh, that was right when Netscape was being launched. So I went and worked for Lucent Technology in '97. For those that don't remember, Lucent and Netscape were the two biggest plays in the tech space in the '90s. So I went work at the labs for a couple of years in '97, '98. Came back to Brazil to open the business here, help open the business here in Brazil. It was a fantastic ride because that was during the telecom and internet boom of the late '90s. Um, but then, everything fell off in the early 2000s. I left Lucent in 2002 to become an investment banker doing telecom and technology. That was when I met Laura, my co-founder. She was an equity research analyst at CS, covering TMT. We became fast friends. We started exchanging ideas about technology and companies. In the early 2000s, also, I was very lucky to meet Marília, who was founding Endeavor in Brazil. For those that have never heard, Endeavor is a worldwide non-for-profit that fosters economic development through entrepreneurship. And Marília was setting up that NGO in Brazil in the early 2000s. I fell in love with the concept of helping the economy through fostering the entrepreneurship. And interesting enough, back then, Jaime, there was no word for entrepreneurship in the Brazilian dictionary. That was not part of the lexicon, right? I mean, there was the word empresario, right? But
Yeah.
not entrepreneur. which are very different things, right? So the concept was not part of the Brazilian economy back then. So from 2000 to 2010, Endeavor was critical to develop the Brazilian startup ecosystem because they were, um, promoting the idea of becoming a founding team. They were promoting the idea on how to grow a business, promoting exchange between Brazil, Europe, and US. So there was a very interesting moment where there was no knowledge of what we have today available.
And before we go, we talk more about professional. Edson, I was doing some research, and so you mentioned that you studied business administration, then the all of the guitar and the rock band part. But did you also know how to code as a kid, like coding games and stuff? Did you learn that on your own, or how did that happen?
I learned on my own. I think that in the early 80s, when the whole BBS movement was starting. For those not young enough, BBS were the internet service providers of that age. We used to dial by telephone and exchange code by sounds, which was really weird. And the only way to play games was to code, right? So I learned it on my own with several friends, and I was building games. I was building or actually coding software for my dad to run his business. So yeah, that was a big part of my development. Learning to code. I started with COBOL, and then I moved into basics. Uh,
Thank God.
so so
Why didn't you stay as a coder? I mean, you were a successful musician, then you went to the family business. Of course, going from an European tour and Nirvana and everything to the family business must not have been an easy call. Why did you go coding, or at least after Lucent?
Well, I mean, the coding thing was really intellectual, and I really liked doing it. But I actually liked more the business part of of running a business. Um, so I dropped coding when we started, hiring developers, to build the systems that I were required to run the family business. Back then, there was no SaaS, right? I mean, it was hard to actually to it was even hard to find uh, desktop software back then, right? I mean, we had to develop pretty much everything. So we started hiring software firms to develop the software for the business, and I moved into the managerial scope of the work, if you will.
And enhance the business MBA.
Exactly.
And then how was the boom and bust of the bubble? That's always a topic I like to cover because for us who were not there, I mean, it's something that we all read about, but we didn't experience it firsthand.
Well, I think that to some extent is similar to what we're going through right now, right? So I think that this cycle that we're going through for me is the third cycle that I have lived in the tech space. I think that we have got to learn to live in cycles. Everything go up, everything comes down, right? And as long as you learn that that's how life is, how business cycles are, how technological cycles are, I think that you become you become less anxious about it. Uh, but back then was a big thing, right? I mean, back then was something, uh, and there was actually a lot of things packed together in a couple of years. There was the dot-com bust, but there was also the twin towers at the same
Hmm.
time, right? I mean, so those were a couple of pretty scary couple of years. um, and that was actually when the Chinese actually took over the hardware space. um, and I think that the combination of all of that was really striking about that particular time in history.
So, and then you went to become an investment banker at Cicerone.
Right.
As I understand, you founded Cicerone, right?
That's right. An investment bank boutique focused on TMT in Latin America.
And how did you evolve from Cicerone to becoming an investor? How did that play out? Is not as necessarily common as one would think.
Well, I think that investment banking to me is a very formative experience. You learn how to pitch. Your life as a banker is to put together, thousands of pitches for potential clients, for companies that are you're either buying or selling. Your job is to become an expert in valuation, valuing businesses, and defending the value of businesses. So those two experiences were extremely critical to me. Um, and although most of the VC industry they like to play the momentum game, I think that having an investment banking background kind of helped me get grounded, if you will, into actual fundamentals, and I think it has helped me and us to navigate through the different cycles, and understand again that everything goes up, everything comes down. Value is value. Yes, we are not financing cash generation company when we're a pre-seed investor, but eventually that business has to become a cash generator business, right? So all of that, I mean, to me is critical as part of creating the genesis of a company that is going to become successful.
And how was beginning Astella? And so just to think, I don't know if you know Jaime, but most of our listeners won't. But that was like a founding moment in Brazilian venture capital, a dinner or a trip hosted by 500 startups to Silicon Valley. And what was that already at Astella, or still at Cicerone, or transitioning?
No, we were. You're absolutely right. And actually, we put together an ebook about the history of the Brazilian ecosystem. I'll send that to you guys so you can share with your audience. Uh, but we found Laura and I founded Astella in 2008. Um, I think that Eric from Monash had founded in 2006, if I'm not mistaken. Kazakh was founded in 2010. Um, Red Point 2011. So that was when the cloud was actually getting to our lives. VC was becoming hot again in the US. There was a lot of interest from US investors, looking to Brazil as a large economy. And you're absolutely right. I mean, that trip that Betty from 500 startups put together was critical for the entire ecosystem. That was early 2010. And that was actually when we start seeing the flow of investors, founders, advisors, consultants, coming in and out of Brazil. Um, it was a very special moment. For those that like soccer, football, I think that back then was like playing. We I'm not sure how to say that in Spanish or even English, but you're playing Varzia, right? I mean, you're playing.
Okay,
Like a
yeah.
third tier or a fourth tier thing.
Exactly.
And how was the trip? I mean, why was it so formative? Well, what happened there? Who was there? What did you meet? And when coming back, what did it change in your professional lives?
I
And by
was
the way, these were the popular trips that 500 startups was doing around the world, right? That they would all go on a plane and visit like other not tier one ecosystems and stuff like that, right? It's these kind of trips. They were pretty
absolutely,
popular on Twitter and stuff. Yeah.
absolutely. I was not part of that trip, but actually, what Betty did, I mean, she took 10 founders. Eric from Resultado Digitais was there. Marco Fisben from Descomplica was there. Um there were plenty of other guys that were part of that trip, but the impact they had when they came back and start sharing with the whole ecosystem. We used to gather every other week. Um there were like 30 of us that used to get together back then to pitch to each other and exchange ideas. And there was like an aha moment, right? When we start learning from the best in the US. So the whole, again, as you said, Jaime, the trips that A500 was doing, the blogs that the VC investors were putting out there, all of that was, critical information to us. And, that ecosystem was, eating that information as fast as we could, and that was, part of the initial movement.
So how was Astella pre that visit, pre that trip? I mean, you started Astella in 2008. Was that pre July or post July? Because everything changed in July. Uh, and then you started, as I recall, it was sort of a, you had like an equity, sweat equity for some startups, right?
Absolutely. So we started trying to fundraise in 2008, 2009. Got nowhere. We were not able to raise a dime, zero. So basically in 2010 we wanted to become a VC fund. So we start doing equity swaps with founders as advisors. We had like $1 million, $1.5 million, and so it was a bit of cash, a bit of advisory. So that was fund one. We did 11 investments like that. We got four exits 2 years later. Um,
Fantastic.
so we got a
Fantastic.
lot of money back. The founders, made a lot of money. And that was when, in 2014, we got our first institutional investor, Spectrum. He They invited us to become an institution, to establish a formal fund, um, and then everything became history. As you said, the entire ecosystem grew. Investors started, getting attracted to the asset class, and then it became a lot easier.
And how did that sweat equity and I would say tough beginning impact your views on capital efficiency for startups?
That's a great question, man. I think it was everything, because we had to help companies grow with no money, right? That was when we basically learned that there are two types of unicorns: the Cobra Kais and the Mr. Miyagi. Today it's pretty well known that it takes about $270 million to create a unicorn anywhere in the globe. That's the median amount of money. But there are companies that do that with $4 million, and there are companies that do that with $3 billion. So since we didn't have a lot of money, we wanted to find those companies that could become a unicorn with $4 million, not with $3 billion. And we learned that in order to do that, in order to grow fast and efficiently, the only possibility of doing that is when a company has a proprietary distribution channel, when that company doesn't depend on Google, Facebook, TikTok, or paid media, right, to grow. So we start going after founders and businesses that actually were developing their own demand generation strategy. And that's how we invested in Resultados Digitais, Omi, Salvi, all big successes that develop big businesses generating their own demand.
So that's a great point. That when we all look at startups, we are all thinking about the balance between product distribution and some combination of both. When you're a pre-seed investor, that's a little harder to do because it involves some sort of forecasting. But you, of course, are a very successful pre-seed and seed investor. How do you see that combination, distribution against product? At some point, you have to choose what to focus on. So doing both is not exactly the best thing all the time. Omi, of course, is extremely successful in developing its own distribution channel, and you've been through that firsthand. Um, but what are your views in terms of product versus distribution?
It's a great point. I think that the hack that I will look for is you have got to have an okay product and a fantastic distribution channel. So Three stars for product, 5 stars for distribution. That's usually the balance we look for. Uh, of course, as more product-led growth the market becomes, the more those two things become just one, right? But having a good product is enough. Uh, but you have got to have a fantastic distribution channel. You have got to have, something unique in terms of generating top line and converting sales.
Yeah, we have those discussions a lot because Brazil is a country where you can go from 0 to 1 billion only within Brazil. And so distribution is a lot is very present in all the discussions.
Right.
When you start exporting, even from a small Latin American country or from a smaller European ecosystem, the product gets to be more relevant because you can't export distribution channels. So it is a very very present discussion in our investment committees.
I like that, and I think that that's part of understanding in what type of ecosystem you're investing. So Brazil is not Europe, Brazil is not US, Brazil is not China, Brazil is not Israel. I like to compare VC ecosystems to fishing ecosystems. There are places you go to fish whales. There are places you go to fish tuna, right? You can compare a tuna with a whale, but you can compare the profitability of a sheep fishing tuna and a fish and a sheep fishing whale. Uh, so you're never gonna find a whale in Brazil. We're not gonna do Google. We're not gonna do Tencent, right? And that's okay. We're not gonna do cybersecurity as Israel does, and that's okay. We have terrific tuna, so let's fish tuna and make money with tuna.
Good
That's a
analogy.
great
Yeah.
point. That's a great point. And so let's start with the RD story that is amazing, and it goes through all the development of the Brazilian ecosystem. How did you find RD? I mean, you were there. I imagine it was the beginning of the second fund.
That's right. That was in 2014. I actually knew Eric since 2010. And that's something that Laura and I have learned from our days mentoring Endeavor. We did so much mentoring from 2000 to 2010 that mentoring became our top funnel strategy. So even today, we first meet founders for mentoring, and then we talk about deals. Uh, and so that became our origination machine, our proprietary distribution channel, right? So we meet with about 100, new founders per month, about 1,000, 1,200 new founders per year through mentoring, either one-on-one calls or you know uh, 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 talks that we do online and events that we participate. So we think education is a big part of our business, and that's how I met Eric at RD Station. That's how I met Marcelo at Omi, Daniel at Salvi, mentoring.
What I'm just going to stop you there because it's a very interesting point. How did that change as the markets became hotter, and as the pressure to do deals faster started coming up?
Well, it was really tough for us because we are slow, right? There's this joke in the valley that if you want to get the best possible term sheet, you go to Andreessen Horowitz. If you wanna get the worst possible term sheet, you go to Bessemer. We like to think ourselves as Bessemer for Brazil, right? So during the boom, everyone wanted to get a term sheet in a week, and I used to tell founders, you know what? Good for you. Go to our competitors. If you want to develop a relationship, we're here. If you want to learn how to, build a nice business, we're here. During those years, it was tough because there was so much great stuff, coming through the doors. But I think that I know being older, having been a banker, having been through at least two other cycles, uh, it was enough for us to hold our horses. Um, and I think that the good thing is that in a market environment like that, that mental model is king, right? So now founders, they come back to us and say, you know what, you guys are right. Let's build our next one the right way. And that's really interesting about VC, right? Because we're here in it for the long haul. So we see a founder once, we pass. He does great, he sells, he comes back. We see a founder twice, he fails, and then he comes back, right? So it's a long term thing. It is a relationship business. If you have patience, I think that you can do great.
Yeah, I think
Good, good.
we're. No, I was gonna say that I think we all went through that in 2021. Where and I think, kudos to you, Edson, if you were able to stay true to the principles, because I think a lot of us, and I think we as well at KFan, we did some of those deals where the new normals seem to be to rush things and rush decision making, and I think that increases the chances of making the wrong investment decisions. But I think all of us, or most people in the industry, we actually welcome the current times of being able to actually know a team and know a founders, and not do everything through Zoom or Google Meet, and actually got to spend time with the founders, because I think it's good. It's good to learn from one another, especially when you're going to enter a long relationship, for sure.
Absolutely.
So going back to RD, so you met him through education, and at some point he started a company. He started a company, and you were mentoring there, and he was started fundraising.
That's right. When he first fundraised, we didn't have a fund yet. So I tried to get Eric into a equity swap advisory thing. He said, no, I need money. so, so, so I worked my butt off to get the money until we fundraised Fund 2. And then we were able to, to, to get a seat at the table. But even before investing, I was part of the company day to day. I helped them, find their first clients, develop the product. And again, that's what, is so rich in terms of investing in founders, right? I mean, you were actually part of the day to day operations, you're learning. And that's the most exciting part, right? I mean, being part of the incubation of new ideas, of new products, new distribution channels. That's really what excites us.
And was it an early success, or did it have to pivot? Did it have to transform into what it later became?
No, I think that he was right on in terms of his original product idea. He was right in terms of his distribution channel. And in our opinion, what sets apart a efficient founder from a brute force founder is the ability to focus. I can I can trace back level of success and level of failure in our history over more than 50 investments to how focused the founders were at the right beginning. So those founders that had just one persona, one ICP, one product, and one distribution channels were infinitely better and infinitely more efficient in terms of growing than those founders that were, you know, on and off in terms of persona, on and off in terms of product, and on and off in terms of distribution channels. Those either failed fast or they took a lot more money to get to the same place. So to us, focus is absolutely king in terms of finding the right team and investing in the right companies.
Which probably makes it harder to assemble a good co-founding team, right?
It's so hard to focus, man. So hard. And I understand as a human being, I usually tell founders that everyone wants to invade Europe, but no one wants to pick Normandia, right? Founders, they typically try to invade Europe, through every possible beach out there. But focus and finding and securing Normandia is really hard, really hard.
On the topic of focus, Edson, and looking at it from the other point of view, which is the investor point of view, and this is something that we've discussed internally many other time. I mean, many times about focus or becoming specialized in a specific sector, business model. I think you guys, from what I read on the website, I mean, you invest in B2B SaaS, you invest in marketplaces and a few other types of business models or types of companies. I mean, how do you guys, and you've been at it for many years now. I mean, how do you guys think about that, about focus from an investor perspective? Does it make sense? Do you think it would be better for you guys if you were actually focused on a specific vertical? Maybe it doesn't make sense because the Brazilian market is not big enough to do that kind of stuff, which we think is the case, for example, for Spain. But how do you think about focus from the investor perspective? Because I think, I mean, having been at this for 7 years now, I think it's actually one of the things that you can lose very quickly as an investor, and I mean as an individual, not as a fund, is like losing your focus and trying to do too many things at too many times or looking at too many deals.
You're absolutely right. I think that I don't think that Brazil is still at a point where focusing really makes sense at the size that we are currently in, right? Perhaps as a micro fund, as a micro VC, I think that focusing makes a lot of sense in terms of either economical sector or business model perspective. But
Because what kind of checks do you write
well,
for the audience?
we are currently operating at $150 million fund.
Okay.
I don't think that at this size in Brazil, focusing too much makes a lot of sense. Um, and what we learned throughout the years was really to focus on business models. And we learned that everything that we could possibly find in Brazil would boil down either to a SaaS business, a marketplace business, or a consumer digital business. So understanding those three types of chassis would allow us to look at pretty much 95% of things that would come our way. So a SaaS business for health tech is the same business as a SaaS business for fintech, or a SaaS business for agri-tech, or a SaaS business for whatever. It is a SaaS business, right? A consumer digital business is the same if you're selling finance, credit cards, or if you're selling makeup. So we learned that boiling down to business model would allow us to act faster to the different types of things that we were seeing coming our way.
So regarding the common traits, either other than focus, what do you say? What do you say are the common traits between all the successful founders that you financed?
I, to us, the one thing we actually look for is learning agility. There are lots of types of personalities, lots of types of backgrounds. We like to segregate founders into four buckets, right? The super founder, the mafia tech, the first timer, and the executive. The super founder is someone that already did great and doing again. A mafia tech is someone that has worked for a super founder. A first timer is someone that is doing something for the first time in their lives, and an executive is someone that has worked for a big corp and is now trying to go into entrepreneurship. Uh, they have different styles, but at the end of the day, to us, it seems that those that are fast learners always do better. So those that take comments, think about it, and try to learn something out of it, and get back to us, within a day or 2 days or a week, they perform much better. So the way we try to measure that is to, in every interaction we have with a founder or the founding team, we provide some content. We either ask the founders to read something, watch something, or listen to something, and get back to us about that idea. If we feel that other team has learned something, has changed, something their way of thinking, we realize that they're keen into learning, because building a great business is about learning something new every day. And that's what we try to measure as fast as we can.
Which doesn't mean Edson, I guess, that the founder needs to agree or do whatever you're saying or the article or what you shared says. It's more about valuing or measuring critical thinking and being able to adapt, right? You're not
Absolutely.
looking for, okay.
Absolutely.
And was that present in both RD and OMI from the scratch?
In everything we have done over the past decade. So knowledge peels is really our main theme on a daily basis when we develop relationships with founders after we invest, uh, and and improving that heuristics is something really critical to us.
So still in the topic of founders, you were mentioning that you started in the late '90s, and you were there at the bubble, then the burst, then the cycles, and then the boom in 2020, 2021 in LATAM. How would you say the founders changed? Those profiles, the way they work, what they were thinking about, what they were aiming. Um, what do you think changed, and how did that play out in the startup that they founded and succeeded and or failed?
That's a fantastic question, man. I think that there are two critical changes. One, founders are becoming more product oriented. So product knowledge was not something present in Brazil. We have to go back in history and remember that Brazil, from a engineering perspective, mimicked India. So the entire developer community in Brazil was formed to develop software for other people, right? Just like India. So we were great in engineering, but we were bad at product. So product management was non-existent in Brazil. And founders have learned that and are picking up on that. And the more professional they become into product management, the better the ecosystem becomes. The other thing is go to market, is selling, right? Uh, it amazes me that even today we cannot grow as fast as US companies grow. And to me, that's not a total addressable market issue. It's understanding of product and growth hacking, call it what you have, but the ability to sell at scale.
It's
And
interesting that
know
you
then,
mentioned that. Go ahead, Gustavo. I can make my
no, no,
comment
sorry,
later.
go ahead.
No, I was gonna say that it's interesting that you say that, Edson, because I mean this is something that we discuss internally often, which is that because I think what you said about being good at doing technology but not product was also the case. I mean, it is the case for many up and coming ecosystems, and it was definitely the case in Spain where product management. I think no one 10 years ago was talking about product management, and now people are. And there's one thing that we still see with compared to the US or to the US based companies, which is from a technology and product perspective. I mean, there's a lot of good talent over here. But when it comes to, as you were saying, go to market, especially on B2B SaaS, and we see it quite often with B2B SaaS. I mean, there's still like a big gap compared to the things that at least in Spain, most B2B SaaS companies, I mean, there's a few outliers, but there's still like a higher level that Americans, for some reason, maybe it's a maturity of the market, maybe it's are some other aspects they're able to achieve, and that on the product and engineering side, I mean, we're getting there, but on the go to market side, I mean, and distribution, thinking about distribution, there's still a gap.
Huge. Same in Brazil, and we can feel it that uh, the more conferences, the more companies produce content about it. The wider the audience gets the message, And that's why we think that it is critical for things like Endeavor to expand even further. It is a knowledge quest. It is a quest of how to make sure that people learn that those tools are available. They are not rocket science. They just need to realize that there's something out there. There are tools, there are techniques, there are playbooks that you can actually use to implement and grow much faster. Um, just to give an idea, one of our portfolio companies, Omi, conducted a study comparing SMBs in Brazil with SMBs in the US, and they learned that the difference between Brazilian entrepreneurship and US entrepreneurship is not on the failure rate, right? Brazilian companies, they fail at the same rate as US companies fail. The problem is that those companies that exist, they make less money than the US companies. So they make 6 times less per employee than an American SMB company does. So they sell 6 times less, they're 6 times less productive. It's knowledge, right? I mean, it's not market, it's knowledge,
Yeah, in the US, they have a saying that everyone is a salesperson, and
right?
every job is essentially a sales job. And I don't know how it is in Spain, Jaime. You can comment on that. But in Brazil, sales if you're not a salesperson per se, is not done. I mean, the person he or she doesn't mingle with that, and it's weird. I mean, when you go to the US and you eventually find people at every dinner party, every lunch and everything selling whatever they can, even if they're the secretary or the CEO. No, it's amazing. It's a
It is.
cultural
It is.
thing.
Yeah, yeah, it definitely is. And I think something else that we've seen with our companies from the Spanish point of view is that, especially when it comes to hiring and building go-to-market teams in the US, we've seen it over and over of the fact that, as Gustavo was saying, Americans are very good at selling themselves and selling everything. So sometimes, and they have this aura around them about selling that sometimes they can even look from a talent perspective when you're trying to build like a go-to-market team. They can even look like better than they actually are because
Right.
of the way they sell themselves. And then you find out a months down the line and after burning like a bunch of cash that perhaps they sold themselves too well and yeah and you have to go back to the beginning.
True.
So when you look at the successful stories from your view, how do you instill that? Because we have a lot of multinationals selling in Brazil, competing with all the big startups with all the bigger scale ups. Um and you were very present in the companies that you founded. How do you instill that instinct for them to grow faster?
Well, we have learned again through Endeavor that the best way to do is to put all of them in the same room. So the more exchange we promote among founders, and they learn from each other, the better off they are. Uh, that's the best possible way of instilling and exchanging information. Putting a bunch of founders together, uh, bringing real problems, to the screen and having them discuss it. So the more we do it, and the wider the scale of those meetings, the better off the market environment is going to be.
And how do these founders from different vintages relate to one another? Because they come from very different backgrounds and scenarios, right?
Oh, that's such a great question. And that's the most interesting and loving angle of founders. I mean, they love to mentor. So if you are a beginner, trust that there are going to be a lot of people out there willing to talk to you and help you. Uh, and if you are a founder, if you are not mentoring 10 other founders, there's something wrong with you.
Yeah, everybody's present at Endeavor, for example. It's
E- e-
amazing.
exactly. So that's another angle. I mean, stealing mentorship is absolutely critical to training the next generation, to exchange knowledge, as you said, between different vintages. I like this rule of thumb that you always need a mentor that it is no more than one or two steps ahead of you, right? Someone that can guide you through your challenges for the next 18 to 24 months. Because I know that Bill Gates is extremely successful, Steve Jobs is extremely successful, but that's so far away from where I am today. I need someone to help me get to the next 18 months, and finding mentors and other founders that have been through that is absolutely critical.
And you at Astella organize all of that for the founders of the portfolio companies.
We try to promote as much as we can. We have something called Stella Expert Network. We have cohort-based learning. We have gatherings. I know most of the VC funds do that here. Endeavor. Um, so I think that's a very interesting angle of the Brazilian ecosystem that I really like.
Good. And looking ahead, what are you excited about for the future? What segments? What angles? What strategies?
Well, I mean, first of all, I think that at the vintage 2023 2024 in Brazil has the potential to be equal to the 2009 vintage for Israel. Uh, 2009 vintage for Israel was the first vintage that we learned from our peers there, was the first vintage when they start getting more second timers than first timers. Uh, and I think that's going to be the reality for the Brazilian ecosystem in 2023, 2024. Just to give you guys some perspective, 18% of our founders in Fund 2, vintage 2014, 18% were second timers. In Fund 3, 2017, 32%. Fund 4, vintage 2020, 41%. We think that at least 60% of Fund 5 is going to be made of second timers. That's huge, right? I mean, they're faster, they have a larger addressable market. So the potential, I think, for the vintage is incredible. Plus, we are investing at 2017 pricing levels, right? So there's more market, more talent, prices are better for investors and founders. I don't think this is to investors advantage. I think it is better for founders to have more decent valuations and decent round sizes, because overvaluing and bringing too much money to the table is bad. It's not always good. uh, in a technological cycle that is going to be transformative to everyone, right? So we've been through cloud in the early 2000s, mobile in 2010. Now it's going to be artificial intelligence, right? So talking about Brazil, those three things are going to be combined in this vintage. It's going to be awesome.
And are our tech teams ready for that to tackle that challenge?
What was that?
Are our tech teams ready to tackle the AI challenge?
Well, again, I think that Brazil is a application and commerce environment, right? I like to divide technology into four layers: infrastructure, platforms, application, and commerce. Again, we are not going to see infrastructure, artificial intelligence infrastructure in Brazil. We are not going to see artificial intelligence platforms in Brazil, but there's going to be plenty of applications and plenty of commerce being done through AI. And I think that we're completely capable of taking that to the next level, not trying to compare us with the US, China, or Israel.
Oh, why do you think that is, Edson? And I'm asking this, for example, what you were mentioning about the infra layer in Brazil. We even last week, we're recording this on May 31st. But yeah, so last week we published a Gen AI report that our head of research Nacho put together. And one of the things that we did is map out the Gen AI ecosystem in Spain, which is still very small. It's a nascent thing. And one of the things that we were looking into, or that we discovered, which is not a surprise because we've seen it before, is that there's a lot of stuff, or quite some stuff on the application layer, pretty much nothing on the infra layer, which probably right now is where some of the more interesting investments are when it comes to technologies such as Gen AI. You mentioned that the same is true in Brazil, and I guess the same is true in a lot of other ecosystems. Why do you think that is? I mean, do another way to frame the question is: do you think as ecosystems mature and they become bigger and larger, and with people with more experience, you start to go down the stack and go into more infrastructure, deep tech, enabling technology, enabling technology sector? Or do you think that some markets are actually born or created to just be on a specific layer for some reason?
That is a great question. I'm not 100% sure. I mean, first of all, I try to move away from the underdevelopment syndrome, right? That because we don't have that, we are underdeveloped. I don't buy that, and I don't like
Hmm.
that. I just think that different ecosystems are just different, and I think it is related to clustering, right? The more I read about biology, uh, the more I learn that clustering is critical to the development of anything. And developing the initial cluster is very hard, very difficult. And once that cluster is up and running, it self propagates. Uh, so replicating the infrastructure layer in the US and China is very expensive, very hard. It is a different type of knowledge. It is a different type of money. Um, so deep tech is deep tech, right? And soft tech is soft tech, and I think that there's nothing bad about playing soft tech, and understanding the ecosystem where you're operating on.
I have just one last question. What is missing in the Brazilian ecosystem? I mean, it used to be talent, now we have talent. It used to be capital, now we have capital. It used to be the next capital for the next round, now we have capital for the next round. Then it became exits. Now we have exits at Nasdaq, at Bovespa, a bunch of M&As, amalgamation between startups, and so forth. Is there something that's still missing? And if so, what it is?
Penetration. I think that if you read through Atlantico's report, and I think that's a name that I would suggest you guys talk to, Julio. Uh,
He'll be here on in August.
awesome. You see that just by increasing penetration to Spain's level, the Brazilian ecosystem will multiply by 10, uh, both on SaaS as well as on consumer side, right? So I think that that is another angle of the low hanging fruit that you find in Brazil and Latin America. Uh, let's look at some of our examples: Omi and Salvi, business B2B and consumer. Omi has 130,000 clients. There are 4 million small and medium enterprises in Brazil that do not have an ERP. 4 million. You know why we cannot? It's hard to sell to those 4 millions. If you look at e-commerce in Brazil, why people are not buying more stuff online. So I think that's a critical question for Brazil in the next decade: penetration.
Probably the neobanks and the delivery apps have been the first ones to tackle that, right? Because their
Absolutely,
usage is unbelievable.
sure, absolutely.
Before we move or we move into the closing questions, one last question. So you, Edson, has been at this for longer than Gustavo and myself combined, actually. Probably.
For
I'm
sure.
not sure if that's
For
a good
sure.
thing.
So and in the audience, I mean, we have a lot of investors or people that want to join the VC world in Spain and also in Latam. When you probably mentor young people as well, not just on the founder side, but also on the investment side. What kind of, I mean, what 2 3 tips, based perhaps on lessons learned by yourself and in your career, could you share?
I think that VC is a nexus class, not an asset class, right? Either you have access or you don't have an asset. So building your proprietary distribution channel as an investor is critical. So finding a way for founders to want you in their cap table is absolutely critical. So you have got to build a personal brand, a firm brand. You have got to be valuable for something, not just for money, right? So either you're too good in a particular sector, or you know about go to market, or you know about product, or you know about company building, but you have got to understand something that is critical for a founder to want you. Two, you have got to have an investment thesis, right? Going back to your point about focus in our profession. If you don't have a thesis, you start looking at everything, you get lost into the myriad of opportunities. So a thesis are going to have help you narrow down to the things that you're really good at, and only invest in that, angle of expertise. And the third thing is you have got to develop an investment process, an investment system. It has got to be something that is written, that you can see evolving over time. Um, because, as you mentioned before, we get carried away by the moment, you get carried away by our peers, we get carried away by, founders. So without a process, it's really tough to become or to live sober, if you will. So those are the three things that I would recommend, to anyone that is interested in investing in founders anywhere in the world.
Thanks a ton for those. So, closing questions. Can you recommend us, Edson, a book or some form of content? Can be startup related or not. And could you also recommend us someone to invite to the podcast that hasn't been on before?
Cool. So I already talked. I spoke about Julio Vasconcelos. I would recommend you guys to bring Martino Bagini. He was a former partner of ours in Brazil. He moved to Italy. He was an angel at Docebo, and then became a COO of Docebo. And they become the biggest SaaS company out of Italy. Did an IPO in Nasdaq Canada. Uh, Great guy for you guys to compare Brazil, Europe. And the other name would be Paulo Veras, from 99 Taxis, the first Brazilian unicorn. Um, he was a four-time founder before founding 99. So he failed four times before actually hitting big one. Um, Big
Yeah,
example of
we have to have Paulo here. We just co-invested in him yesterday. We have to have him as a guest. He's amazing.
awesome. And in terms of literature, I would recommend something very different from what typically other investors recommend. I would recommend founders to go through the Bible.
I wasn't expecting that one. Okay.
That was unexpected. It's valid, though. It's very valid.
Well, I mean, not only as a religious thing or spiritual thing, which I like, but from a company building perspective, replicating what uh, what uh, what Moses has done in the desert is very similar to what we go through building a company, uh, and then did what Paul did to spreading Jesus' message is one of the most brilliant examples of distribution channels that I have read in my life. Right? I mean, he deliberately went after existing mosques to spread Christianity. And that's something that our founders they lack. They lack understanding that you only build a distribution channel in top of something existing. And I'll give you a modern example. Henry Ford. Everyone thinks of Ford as being a talent for developing the production mentality. But what was really brilliant about Ford was that he transformed the small stores that used to sell and repair carriages into dealerships. So he tapped into something existent to develop his own distribution channel. Um, so those are, really two interest part of this the Bible story that I really like, and I think it's pretty telling for founders.
That's great. We started the podcast with analogies between trash metal bands and investing and startup founding, and we end up with the Bible and founders. I think the audience would was not expecting that at all, but pretty interesting, certainly. Edson, thanks a ton for your time. It's been a real pleasure.
My pleasure, guys. Really honored to be here with you. Thank you so much.
Thank you. Have a good
Thanks for
one.
coming.